Up next, we move along. It's our time to turn our attention over to the markets. For the first time since the government shut down, traders this week have been weighing expectations from the WASDE and crop production reports, both released just before our weekly broadcast is out. There's been a lot to unpack this week, from the reopening of the U.S. government to the latest trade negotiations. So joining us to break it all down this week is Central Valley Ag's Luke Beckman. Here's our discussion from Wednesday. First, quick harvest update. Where you're at near Elgin, Nebraska. Harvest pretty much wind down at this point?
Yeah, harvest pretty well wrapped up, down to the last few percentage points remaining really across northeast Nebraska. So it's been a good harvest run, a very nice local crop in this part of the state for sure, with the growing season that we had. So producers overall, on average, pretty pleased with the production.
We've got the crop largely taken out of the field. Let's talk about marketing it now. First on corn, let's begin there. You mentioned to me earlier that the charts are showing we could be breaking out perhaps to the upside here, depending on how the data shakes out. We do have that WASDE report that's going to come out on Friday that's after you and I are talking, but before our broadcast will be made available on late Friday and into Saturday. Talk about corn, where you see things going at this point.
Well, the corn balance sheet is really split between what we see in the domestic carryout and what we see in the global carryout. In the U.S., we have ample supplies of corn, and that was really due to the large acres that we had this last spring. There were not a lot of great alternatives to growing corn, and so the U.S. producer loaded up on corn acres. One of the things we saw in the September stocks report was that it was much larger than expected. We had a couple 100 million bushels of corn that was a bearish surprise. The market's known that for a long time. It'll be incorporated into the data that we see on the 14th, which will add to our supplies. Why it's important, though, and we already knew that, why that's important is the USDA likely has the ammo to reduce the feed and residual estimate number for the new crop, or the 25-26 marketing year that we're getting into. So even though we expect the size of the U.S. crop to come down, there is some demand that probably gets cut to keep our carryout at a pretty healthy level. So purely fundamental, the domestic carryout's big enough to keep corn prices under pressure. However, we've really seen a nice lift in corn futures over the last 40 days, and it just feels like this corn market wants to bust through some resistance and really get into the next 20 cents price band and maybe push December futures up into that 450 level. If that's the case, it really feels like the producer's ready to reward that type of a rally. And based on just what we see in the domestic carryout, that would really be a pretty attractive price considering what we have. Globally, the corn carryout continues to get a little bit tighter. And we're going through this process right now where we're really building a nice demand base. You've got currently the total usage for U.S. corn over 16 billion bushels. That's massive. That's a record. So as we go through these lower price periods, we're building demand and setting us up for that next cycle where we do trade to higher prices. When that happens, we don't know, but we're definitely building a layer of demand while prices are low. So long term, I think there's going to be some opportunities in the corn market.
Luke, I want to get your thoughts on how the cash has looked, particularly on corn here, as I ask this question here in 2025, and how that perhaps is different as compared to previous years.
Yeah, you look at Nebraska, we're going to have a nice crop this year, and really the Western Corn Belt has recharged the pipeline. A few years ago, the Western Corn Belt was really in a deficit situation. The U.S. West Coast was in a deficit situation. And so producers in Nebraska certainly got accustomed to very attractive basis values. We had robust rail programs exporting corn out of Nebraska. And of course, they all know that we have a robust processing market locally here within the state, in addition to livestock. Fast forward to this year, and that pipeline's been recharged in a great way. All the way from North Dakota down through Kansas, there's good crops locally. So they've certainly noticed that basis values locally are much, much weaker this year, probably the weakest they've been in a decade for this harvest time period. And that's a function of no export program on soybeans this year. Soybeans are occupying commercial space, farm space that typically don't sit there. And also you had a good corn crop on top of that. And you've got a lot of other suppliers that can hit these domestic and Mexico type markets for corn. So the cash markets are very weak right now, and they will recover as we come out of harvest. But a lot of this will be dependent upon whether anything does materialize with China on soybean exports, where we can clear our throat of excess soybean supplies and create space for this large crop that we're dealing with. So expect basis to be weaker as we go through this year, and that's really just a function of the pipeline being totally recharged.
You brought up a couple of factors we've been tracking in the soybean market. Quite a bit of a bounce here in that market over the past 40 days, as you mentioned, for corn. Soybeans following that pattern as well. How sustainable of a run do you think this is, or are we one tweet away from back to where we were?
As soybeans could really go either way. We've all heard about the 12 million tons that China is expected to purchase this year, the 25 million tons they're expected to purchase each of the next 3 years. We need to see how that materializes. I mean, as of right now, our export program is terrible. I mean, we haven't exported enough soybeans to move the needle to even meet the USDA's forecast as it stands today. And this would be the weakest export total that we've had since the trade war year in 2018. So the state of U.S. soybean exports is not good. But if we can get something done with China, our acres were low enough this past year to where you could really tighten the domestic carryout up and really push soybeans into a new price band. Soybeans usually don't spend a lot of time in the 11s, Bryce. It's really a transition price as we move from low to high or high to low. So we've kind of consolidated in this area after breaking out of an 18-month trade range from 975 to 1075. So this market certainly has the potential to move up another leg, another dollar, if you can get some export business done and keep our carryout below 300 million bushels. You get some headline type activity that pushes prices higher as well, and that can help us. And now we've got managed money with long positions again. So as the government reopens, we'll be super curious to start monitoring two things. One, what does the commitment of traders report say about managed money and their positions? And two, can we start to see some export sales information in the form of daily flash sales to China or other global buyers, and just see what's already on the books? So soybeans really potentially could go a couple different ways, but a lot of it just hinges on, can we get an export program going here in the U.S.?